PSU engineering stock offers a huge bargain. Welcome all to Indian stock market learnings and earnings new episode. Our discussion is mainly for the education purpose only. Engineers India. This is the stock we are going to discuss, which is currently offers a huge bargain. Engineers India is one of the India's leading engineering consultancy and EPC companies in hydrocarbon and petrochemicals. This PSU large cap stock offers a huge bargain. This report came on Moneyworks for Me website. We can see in the report, despite of the poor show in the September quarter 2019, Engineers India remains an attractive investment candidate considering a strong order book, cash in the book around 2,700 crore, which is 53% of the total asset, huge opportunities in the hydrocarbon engineering space, and an asset-light business model, strong return on equities around 17%, return on capital employed 17%, and debt-free balance sheet valuation. Post its quarterly result in the Engineers India stock has corrected from around 122 to 100 levels because of the decline in the net profit in the September quarter result. This provided a good opportunity to buy because it is trading only 11 times the financial year 21 estimated earnings. Valuation should be looked from the perspective of the decent earning growth. The company has been paying a tax rate at 34 to 35%. We all know the corporate tax has been reduced with the new tax regime. This should come down to the new effective rate of 25.2 and thus boost its earnings. What is more, it is sitting on a cash and cash equivalent of around 2,700 crore, which is equal to 43 per share. Effectively, in the absence of the debit, the company is available at Rs 660 per share or at a market capitalization of 3,786 crore, which is merely 1.3 times the financial year 20 estimated sales, and it is 8.5 times EBITDA. More for the long-term investors, in June quarter result, we know it has a very good result. The company has recorded a revenue growth of 28.2% because of the good project execution. The derailment of the growth in the September quarter is a blip. In the first half of the financial year, the company is still managed to grow revenue by 16%. We believe that the growth momentum will resume in the remaining quarters, in the Q3 and the Q4. Thus, we expect a revenue growth this financial year to be in the range of 15 to 18% because of the strong order book. And there are some risks associated also. The risk to the business largely come from the slowdown in the capex in the domestic hydrocarbon industry. A significant drop in oil price may affect the company performance. Currency movement could slow down the capex spends in the client and impact in the execution cycle. The project execution challenges and issues such as longer working capital cycle could lead to slow growth and hammer operating margins. There is positive side and a slightly negative sides also. Now we will discuss the fundamental of the company. Company have a market capitalization of around 6,370 crore. Current market price of the share is 100.8, which is very good attraction. And 52-week low is 92.5 and 52-week high is 129.9. Book value of the stock is 39.15. There is dividend also, a very attractive dividend, 3.97, nearly 4% dividend is giving the company. We can see why the stock has came down to 100 levels from 122 levels. From the June quarter, the result was 124.10 net profit. When the September quarter result is came, it is came down to half, nearly half, 67.75 crore. Compared to the September quarter 2018, 97.77, the result is less. So the stock has corrected its price, and we are expecting a good result in the upcoming quarter result. Then again the upward trend will restart. We can see the future intrinsic value based on future cash flow from the Simply Wall Street website. It is giving a future intrinsic value around 136.23 and the current market price of 100.8, which is more than 20%, which is very good attraction. And we can check the who is holding the shares. Promoters have very good shareholding, 52, and also this is a PSU stock. And institutions, there are 32.60%, non-institutions 15.40. For the long-term investors, it is a very good stock. For 10-year HRA, very good. Long-term perspective, very good. This is information from the Money Works For Me website. And we can check, is there any pledge in the stock? There is no pledging ever made in this stock. You can see from the 2014 to 2019 there is 0% debt, and the company is giving a good dividend. We said already around 4%. Every year it is giving 2 times dividend, final and interim dividend. Last 10 years it is giving consistently dividend. It is very good. Company is performing well. We can check the return on capital employed and return on equity. Return on capital employed is 24.61% and return on equity is around 15.76%, which is very good. And financial health. What is the asset and what is the liabilities? Company have a short-term asset of around 40.2 billion and short-term liabilities of 24.7 billion. Short-term asset is more than the short-term liabilities, very good indication. For the long-term perspective, company have a long-term asset of 9.4 billion and liabilities only 229 millions, which is very good, strong fundamentals. And we said company is debit free. Company is zero debit company. It is very good. There is no insider buying information. And when we check the exponential moving averages, around November first week, company has crossed the exponential moving average downgrade after the result come from the September quarter. Now the stock has corrected. It is correcting. It is running around 100 for the last 1.5 months. Very good time to enter the stock. And the relative strength index is having 41, which is nearer to 30. It is a good time to enter the stock. From the 5-year graph, 5-year low is around 70 and 5-year high is around 200 plus, and the current stock price is around 100. Thank you for watching this video. If you like this video, please subscribe my channel. Please like and share with your friends. Thank you for watching. This is a PSU engineering stock. At present, it offers a very huge bargain. Thank you.